NVIDIA crushes earnings and the market slides 100 points off the high, proving once again that the news doesn't matter. This is Invest with Jacob. Okay, guys, so before I get into what happened in the market yesterday, I do want to talk about the intro and something that I say all the time where news is noise and simply doesn't matter. And that gets misconstrued quite a bit. The news moves the market in the sense that it's simply a catalyst. What I mean is that the tone of the news, or good news makes the market go up and bad news makes the market go down, is false. And we see it again yesterday with NVIDIA earnings. NVIDIA crushed earnings yesterday, and the market did gap up before falling 100 points straight down into negative territory, down about 0.75%. Now, if you're going to tell me in February that the NVIDIA earnings were the reason the market soared because they crushed it, you're going to have to explain to me how they crushed it yesterday and the market went down. You're also going to have to explain to me how we got the hottest CPI report in 7 decades in October of 22 and then rallied to new all-time highs. It simply doesn't correlate, and a logical person has to step back and say what they say in the news is irrelevant. This is easily seen on CPI and Fed days, when before the news can even be digested, the market moves 20, 40, 60 points in a split second, showing you that the move was predetermined. This kind of attitude that trading the news will help has been researched and proven to be false over and over again. In fact, one research said even if you knew the news before it was going to happen, you would still have a tough time understanding which way the market went. This is just something that Elliott figured out a long time ago and may help you in the future. Now, as for the charts yesterday, the market did gap up to new all-time highs before falling straight down the rest of the day into our support area, and now the bears need to follow through. So the question is, can they? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get that daily S&P update, their trade setups, and our buy alerts. All right, guys, let's jump into the charts and take a look. Okay, guys, so in yesterday's video, we talked about the fact that we were looking for a gap up and a move up to new all-time highs, as this pattern was very ugly, and you give the benefit of the doubt to the bulls in that case because we are in a bullish chart right now, and that is what happened. We saw the gap up and then immediately fade, and one of the things I warned about yesterday was on any all-time high, we need to look for 5 waves down and a strong sell-off, and that's what we saw. We do have a micro 5 down, and I talk about this all the time. Micro 5 downs are not reliable. We need a bigger 5 down for that to play out, for us to be a little more confident in the chart. But we got to start somewhere, and we start with a micro count. So off of the high, you had strong volume selling on the day. The open was extremely strong right at the highs. It was one of the highest opening bars for the hourly on the ES we've had in months. And we got a move down that looks like 5 waves for a wave 1 and a bounce in wave 2, and now they're currently working on wave 3. Now, does this mean that the bears are in control and the market shifted and we're definitely going down? Nope. It means we're simply working on a bigger 5 down, which would give us more confidence in the fact that the bears are trying to take control, but they still have to follow through and complete that pattern. Now, off of this 1382, which they hit almost to the penny, just a little bit short, we would expect them to hold under 53.10, but more preferably under 53.03. As long as they hold that area, we look down again toward the 52.60 area, 52.50 area, and then a bounce, and then ultimately 52.40 to give us a bigger 5 down, which would ultimately just be wave 1 of a bigger C wave. So this blue support box we are still in gives the bulls support, gives the bulls a chance to take it back to the highs. Below that support box in a 5-wave structure, and it does look much more like the bears are trying to take control. And at that point, I would shift from a bullish stance in the short term to a neutral to bearish stance, just simply depending on how this pattern plays out. If we get the full 5 waves down, I will shift to bearish and then look for a bounce and then the start to wave 3. And once we get that, we will have a much more confident approach to the move down. Right now, we are simply in a caution mode. The bulls should be cautious here because a breakdown below this box would put the market in more of a neutral stance, and then a completion of the pattern shifts us into a more bearish look. So can the bulls still rally this? Of course they can. This can be simply all of wave 3 up here, and then you have 4 down and then 5 up, but again below this blue box, and that becomes less of a possibility. The 5th wave up would still target that 53.87 to 5400 area overall. We'd still be looking for this to be an expanded B wave. Nothing would change from that regard other than we just look for one more push higher. So if the bears can follow through and break this box down to the downside, break support is essentially what we're looking for in a 5-wave pattern, then we will shift our focus to a more bearish look. But until then, we still give the bulls the benefit of the doubt until they break support. Over on the NASDAQ, Simply put, the NASDAQ did the same as the ES, a high volume reversal candle, reversal day. They're trying to reverse the week as well. High volume move to the downside. They got a 5-wave count. Again, it is a micro count, so we take it with a grain of salt right now, but we do have to start somewhere. We get a micro count, we get a wave 2 up, and they're working on wave 3 down. They also came up just shy of the 1382 and bounced back toward their 1.0. They need to hold below 18,791, although we'd prefer they hold 18,758. This just gets a little too big of a bounce when you get to the 1382. It's how the fibs work. It's part of the advanced fib levels course. But 18,758 would be where we really want them to hold, but technically they can come back up to 18,791. From there, we'd look for another push down, ultimately targeting 18,483, which is just above their support box. Again, until they break down below that, the bulls are still in full control, but a 5-wave move into here and then a corrective bounce, and then this kind of start to the downside would give us a strong opinion that the bears have found a top and are trying to take control of this market and take it down in a fairly large way. So same kind of setup on both charts. We have our key levels. It's a really clear, really easy understanding. As long as we're above support, the bulls are in control. If the bears can keep it below 18,791 on this chart and 5310 on the other chart, we can still look down in a 5-wave structure, and then the bears can try to take control from there. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it. Become part of the trading team, interact with PT and I, and make sure it's for you before you ever spend a penny. You can cancel at any time. We also have our training material, our Elliott Wave for Beginners online course where you can learn to do what I do and how to chart this, as well as the Advanced Elliott Wave course where we go through the more complex patterns. In the Advanced Elliott Wave course, we do get granular on the complex patterns such as advanced fib levels, diagonals, double and triple threes, flats, triangles, etc. And in each of those, we do chart examples, as you can see here, how they play out. Early on, we show you exactly what those waves should look like in pencil so that you can see them without all of the clutter. Then we show you all the fibs that come into play so that you can see how the fibs play out on those patterns. And from there, you saw the chart example earlier. As you can see on the screen, this is helping traders understand the complex patterns in this market and how they play out and why they are so hard. And we do it in bite-sized chunks. Each of the videos is about 8 to 10 minutes long, so they're not overwhelming, and we try to make it super simple for you to learn. Now, if this is too much and you are just getting started with Elliott Wave, we also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be so confusing, as I talked about in the open, when good news makes the market go down and bad news makes the market go up. Simply put, the news doesn't matter, and Elliott knew this long ago. He knew that the key levels mattered and that structure mattered, and he knew what happens when these structures broke and when these key levels held, and that gives you a huge trading advantage over the rest of the market. This course is 25 videos where I go over 3 sections. The introduction, where we go over your expectations, your mindset and emotion, the KISS method, and why this works. Your chart setup and tools, where we go through every tool that you need to use with Elliott Wave Theory and why, as well as the Elliott Wave for Beginners area, where we go through each of the waves, how to measure them, how to understand when they're working, when they're failing, what the key levels are, and what happens when those key levels hold and break. This gives you a great understanding of an irrational market and gives you a big advantage over the rest of the field. Now, the really cool thing about both courses, the advanced and the beginner course, is if you want to get them at a discount and you want to buy both, you can get $37 off by using our course bundle. It basically allows you to get the beginner's course for $30. And if you don't want to pay anything at all, you can simply become a monthly member and become part of our trading team. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as all of the training material. You just saw we trade the SPY and the QQQ, and we swing in day trade. So we do trade quite often in my room. If you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, income trading, which is just killing it, guys, futures trading, and his reduced risk binary method that crushes the market. It's how he structures that trade that's so unique. And it's something you really need to see to understand. And that's another reason for the 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, key takeaways for today. Pretty simple. As long as the bears can keep it under 53.10 and complete the structure down towards 52.40, we have an impulsive wave playing out, and we would shift our stance from short-term bullish to longer-term bearish. However, if the bulls can hold support and drive it back up over 53.10, they would take back control of the market, and we'd look for that 53.87 to 5400 level next. Over on the NASDAQ, as long as the bears can keep it under 18,791, we would look for continuation to the downside toward that 18,483 level. Assuming we can get that 5-wave pattern, a bounce and continuation, then we would shift our stance from short-term bullish to longer-term bearish. However, if the bulls can hold support and push it back over that 18,791 level, we would look towards 19,100 next. Guys, it's the weekend. Grab yourself a drink, get out of the house, have some fun with your family, and I'll talk to you next week.